Hello, everyone. Welcome to the Trend Playbook. The Federal Reserve has laid the groundwork for the next market boom, and we're going to start with next week. Next week, the Federal Reserve has their meeting on Wednesday, December 10th, and they're going to decide whether to cut interest rates or not. According to the CME Fed Watch tool, there is an 89% chance that the Federal Reserve will cut interest rates at that meeting. Me personally, I believe that yes, they're going to cut interest rates by 0.25%, which is going to bring the Fed funds interest rate down from the current 4. Now, back in September, the Federal Reserve had their meeting and they gave their projections for the rest of the year. In that report, they projected that they would lower the interest rate down to 3.75% by the end of the year. It says 3.6% because the Fed funds interest rate is a range from 3.5% to 3.75%. So that's why it's listed as, so them cutting interest rates by 0.25% next week. That would be everything going according to plan, or basically what they envisioned. Therefore, to me, I wouldn't be surprised if they do cut interest rates by a quarter point. Now, I just want you to keep in mind that right now the Federal Reserve is going through an information blackout period. So basically, they're not allowed to talk to the press or the media until the official decision is made about the interest rate cuts. So just so you know, the odds of a rate cut were swinging wildly over the past month. Okay, but why? It's because every time a Fed member gave their sentiments to the media, it swayed the odds. So basically, every time they opened their mouths, talked to the media, it changed the odds, the probability drastically. Now, because the Federal Reserve cannot talk to the press, I don't expect the market odds to change by much. Now, why am I saying this? Why is this important? It's because the Federal Reserve generally goes with the market expectation. Basically, they don't like to give surprises with their decisions and spook the markets. Are they supposed to act like that? Of course not, but that's what they do. That's how they operate. Now, the market expectation is an 89% chance that they're going to cut interest rates next week. But if they decide to not cut interest rates, then that would crash the market. Stocks, Bitcoin, precious metals would just nosedive that day. So I know it's just a mere 0.25% interest rate cut, but still, that's how the market reacts. Now, I want you to take a look at this. In October, when the Federal Reserve had their meeting, they did not give updated projections. So they don't do it at every meeting. At their meeting next week, the Federal Reserve will update their projections for next meeting is going to be very important in terms of what they're going to, at least what they plan on doing for next year, 2026. Their next meeting is going to be on January. And right now, the market expectation is that the Federal Reserve will most likely not cut interest rates at that January meeting. There's currently a 20, they're going to cut interest rates at that January meeting. So we'll see what the projection materials say, and also the Q&A session at the press conference that JPL will give. And then we're going to see, based off that information, how the market reacts and what the new odds are for January rate cuts. So listen, next week, if the market moves significantly on December 10th, it's not going to be because the Federal Reserve cut interest rates, because that is expected. It's going to be because it changed the market expectations for future rate cuts. And here's another very important issue. The Federal Reserve has ended quantitative tightening QT on December. QT is the opposite of money printing. And now the big question is, when will the Federal Reserve turn the money printers back on and start quantitative easing? So QE, and this is very important because if they blast the money printers back on, then of course, yeah, that's going to be good for the stock market, for crypto, for precious metals. It's going to provide a massive tailwind for most investments. But listen, here's what you need to know. There are liquidity problems right now in the markets. The Federal Reserve needed to pump $13.5 billion into the US banking system because of the liquidity stress. So that is the second largest liquidity injection since the pandemic. It's the recent liquidity stress that caused the Federal Reserve to stop QT on December 1st. So they specifically spoke about this at their last press conference. And I'll tell you that when the situation gets more dire, you know what they're going to do? They're just going to turn the money printers back on. That's always their solution. It is now widely expected that QE will start in 2026. But of course, when? I'll tell you honestly, it's really going to depend on who the next Fed chair is going to be. Jay Powell, who's the chair of the Federal Reserve, has his term expiring in May of 2020. And President Trump's going to nominate the next Fed chair. And of course, I don't think anyone's surprised he's going to nominate someone that's aligned with his policies. Right now, the odds are that President Trump will most likely nominate Kevin Hassett. According to Polymarket, there's a 74% chance that's going to be Hassett. Okay, who is Kevin Hassett? Kevin Hassett is an advisor to Trump. Hassett is the director of the White House Economic Council. So Hassett has said to the White House that he wants the job as Fed chair and that he is the best candidate for the job. A White House spokesperson said, until an announcement is made by President Trump, discussions about the Fed nominations is speculation. But President Trump said, and I quote, who I'm going to pick. So Hassett wants to cut interest rates aggressively, which aligns with what President Trump wants. But I want you to know that it is not guaranteed that Hassett's going to win. Although the market considers him to be the top pick, there's still doubts because he may be, it's an issue of Fed independence, because he may be considered too close to the Trump administration. And then, of course, that would disrupt Fed independence or even perceived Fed independence. Additionally, there's speculation that Hasid would not be able to influence the other voting members to the Federal Reserve. So Treasury Secretary Scott Bessent, who's in charge of doing all the interviews for the new Fed chair, said that they're going to reveal the Fed chair, the nominee, before Christmas. So Bessent said that a little over a week ago. However, President Trump said that it's most likely going to be announced in early. But I'll tell you that whoever gets nominated, they're going to pick a candidate that's going to go with an easier monetary policy. So Hassett may be more aggressive when it comes to an easier monetary policy. However, the other two leading candidates are going to be more dovish than the current Fed chair, Jay Powell, which again, that's going to be good for investors. But here's something that I want you to think about. Trump nominates a new Fed chair. They reveal it in, let's just say, January of 2026, okay? But Jay Powell has his term as Fed chair expiring in May of 2026. Then the new nominee is going to be considered the shadow Fed chair. It's because even though Paul is still in power up until May, people are going to be paying more attention to what the new nominated Fed chair says from the shadows, because that person is going to be coming into power very soon. So, for example, we talked about how the Federal Reserve is going to give their projections, but those projections under Powell may not carry as much weight for market expectations if the Fed chair, the shadow Fed chair, says something to the contrary. Now, in terms of my predictions, I believe that yes, next week, December 10th, the Federal Reserve will cut interest rates by quarter points, and that's going to be a sigh of relief for stocks, for crypto, and also precious metals. Now, when it comes to the money printing, we're all going to be looking for clues in the December 10th press conference on when they're going to start that process. I made my prediction that they're going to start the money printing in 2026. I'm not going to give my prediction on the time period within 2026, at least not right now. Now, for the new Fed chair, the nominee, regardless of who it is, whether it's Hassett's or the other leading candidates, you have to think about it. These three candidates, the top candidates, they're going to be more dovish than Jay House. So it's going to be really good for investments, but then again, of course, that's not going to be good for inflation. So just something to think about. That's a high-level overview of the situation. All right, that's all for now. Please subscribe. Thank you for the support. I wish you a very nice day. Take care.